Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Today we are discussing about the most important topic in the accounting journal entries. Before understanding journal entries, we'll just recall the meaning of accounting. What do you mean by accounting? Accounting is an art of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating the thereof. The result we are communicating. It is process of accounting. Now, in business, to record the accounting transactions or accounting activities, whatever happening in the business, we will use this accounting. It is called as language of business, right? What are all we communicating? We are communicating in business what is the assets the company is owning, how much they have spent, ಖರ್ಚು ವೆಚ್ಚ ಇದನ್ನ ತಿಳ್ಕೊಳ್ಳೋದಕ್ಕೆ ನಾವು ಅಕೌಂಟ್ಸ್ ಮಾಡೋದಲ್ವಾ. ವಾಟ್ ದೇ ಹ್ಯಾವ್ ಸ್ಪೆಂಡ್, ವಾಟ್ ಈಸ್ ದೇರ್ ಇನ್ಕಮ್, how much expenses. This company itself want to know what is their expenses and what is the profit or they are in loss. And financial position, it is purely related to the company. They want to know where they are to reach where they want to be, right? Financial position. To understand all these things, they need a proper, a systematic books of accounts. So that journal, this is the primary work in accounting. Here you can see the accounting process starts with sources of document. After that, the primary work starting with the recording, starting with journal only. Right? That's why it is called as primary book of account or original entry. That's why it can be used as an evidence in the court also. Now, how we are recording? We have seen in our previous video, under basics of accounting, all the accountings are affected with two account. One account is debit account, the another account is credit. The two aspects. Always this debit is equals to the credit. Account will be in a T form. There will be two sides. Left hand side, right hand side. Left hand side you are recording all the debit balances. Right hand side you are recording all the credit balances. Okay. Now you have many misconception about debit, credit. It is plus, minus and all, right? Now you will see what is business, how you will run business. In business, anything you will get at free of cost? No, right? In business, if you want to get something or take something, you need to give something. ಕೊಡೋದು ತಗೊಳ್ಳೋದು ಇದ್ದೇ ಇರುತ್ತೆ business ಅಂದಮೇಲೆ ಅಲ್ವಾ? So get something, give something. What is this? We will understand. Now, I'm holding this pen. I need a pen. How I will get my pens? By paying cash. In business, you need a computer to record because now accounting everything is software based, right? So you are using a computer software. How you will get computer? By paying cash. You want cash, you are manufacturing a bike, so you are giving bike. You are receiving cash. Or you are having bike, you want to sell that bike, you need a cash because of some emergency. You sold your bike, for that you received a cash, right? Electricity you are using in office, how you will get electricity? Or they are giving it free of cost? No, you will pay bills. How you are paying bills? Cash. You will have your employees or servant at homes, domestic servants. You will receive service from them, right? How they will do service? By free of cost? No, you will pay cash for them. Whatever the services they are rendering, they will give you a service, right? services. Now, whatever you are getting, that you are debiting. Whatever you are giving, that you are crediting. I will make you understand the conceptually also clear and logically also. This is the concept of journal. Concept of journal entries. Journal entries. Concept of journal entries. This is the concept of journal entries. Whatever you are receiving, that you are debiting. Whatever you are giving to get something, that you are crediting. Now, example, you need a loan. You borrowed a loan because always you won't be having a sufficient enough cash, right? How you will record that? You created an obligation. Loan they have paid you. Cash they have given you, right? You received a cash. This loan, the obligation you have created. The obligation you have created. Are you going to leave this loan account like this only? No. Whatever the cash you have received, you are going to pay later. You said, give me today, next month I will pay you. This is a requirement, adjustment, right? Well, you are paying it back, you are debiting loan and you are crediting cash. The loan account is clear. In simple, now you are having a car. You want to sell that car. You are selling to your friend only. Okay. So what you are giving? Car you are giving. Your friend said, I don't have cash today, but surely I will pay you tomorrow. You are not giving car tomorrow. You are giving car today only. You are delivering the car today. But you are receiving the cash tomorrow. So you have created one account called my friend account. My friend account. So what your friend is promised, he is not going to hold your cash. He will pay you one or the other day. Surely he will pay. But he is not giving you immediately. This is called credit transactions. Credit transactions. But tomorrow your friend came. He is paying cash to you. What you are receiving? Cash you are receiving. From whom you are receiving? Your friend. His obligation is fulfilled. His promise is fulfilled. So you have cancelled your friend account. Here you can see car and cash is remaining. You have given car, for that you received a cash. Understood? Now, to understand in a approaches. Now, just in detail, we'll understand the concept of journal entries. How accounting is starting? It is starting with transactions, right? Transaction is cash paid to Ramu, cash received from Sita, computer purchased, car purchased, right? These are called transaction. How you will verify these transactions? Transactions means it is an event takes place between the two parties by money or money's worth. It can be money or it can be in a kind. Okay, but there should be a transaction between the two parties. Okay, how you will specify or verify this? With the help of vouchers. Voucher will tell you or specify you whether this transaction should go to debit side or credit side. By applying the basic rule only, we are using this transactions, right? Now then we are passing this in the journal. To record in journal, we are having two approaches. The two approaches are traditional approach. Another one is modern approach. I will explain you both the approaches. So presently in this video we are covering traditional approach, and I'll make one more separate video for modern approach. Whichever is easy for you, you can choose. But you should be conceptually clear, and I want to teach you both the methods. Learning should be incomplete, right? So that's why I'll teach you both the methods. Now here we are understanding traditional approach. Under traditional approach, we have an account, right? Every account, the debit account, credit account, the two aspects you are recording under account. Thus, that will be classified in the three different heads. Now, when you start a business, to start a business itself, you need an assets, because cash is also coming under assets. You need land, building, machinery, right? These are all coming under assets only. So all these assets will be named as real account. We have goodwill, trademark, copyrights, all tangible and intangible also. That also I have explained in detail in the basic accounting video. Watch that video. Real account. Then to run a business we need person. To purchase these assets also person is very important. The person has been classified into two. First one is natural person. Natural person. Under natural person, Anil account, Sunil account, Ravi account, all these natural person, we all coming under natural person only. Coming under natural person. Another classification is artificial person. Artificial person. Artificial person is created by, with the help of law. Created by person only, but with the help of law. That is all your company names. Company names. Institutions. Okay. Example, BEL account, BHEL account, BHEL account, Infosys account. All these are coming under the person's account. Okay. Then we have income and expenses. Without that, business is not there, right? Giving and taking. That is what? Income, expenses, profit, losses. All these are named under the nominal account. Nominal account. Now, we have understood three different accounts. Now, what is the rule? How we are applying the debit aspect and credit aspect? Now, here you can see. Every account is affected with debit and credit. Here, for assets, a real account, you are debiting what comes in. You are crediting what goes out. What goes out. Okay. For personal account, you are debiting the receiver. You are crediting the giver. You are crediting the giver. Okay. For nominal account, you are debiting all the expenses and losses. You are crediting all incomes and gains. Incomes and gains. This is also called as golden rule of accounting. Now we'll understand these rules by solving one question. Okay. Question is, journalize the following transactions. 2022, December 1st, date, particulars, amount column. Transactions. Emma started a business with cash 1 lakh. Second, open a bank account with SBI 30,000. Fourth, purchased goods from Ashok 20. 6, sold goods to Rahul for cash 15. 10, bought goods from Tara for cash 40. 13, sold goods to Suman 20. 16, received check from Suman, discount allowed 19,500 check received and discount allowed 500. On 20th, check gain to assured on account 10,000. 22nd, rent paid by check 2,000. 23rd, machine purchased from Paru 10,000. 29th, paid at telephone expenses by check 1,200. Paid salary on 31st December 4,500. So now we'll journalize these transactions in the books of journal. Okay, this is the format of journal. Format of journal, the first column is date column, particulars column where you are recording the debit and credit, which account is debiting, which account is crediting, that you are recording under particulars. Ledger folio, the particular account you have debited, no, the respective account ledger you will post into ledger. There the respective account page number you are recording under the ledger folio, LF. Debit amount column, credit amount column. Now we'll see the first transaction. The first transaction is Hema started a business with cash. Here you can see Hema is started business. So Hema is a owner. I'll explain you the concepts also. We have one of the first concept is business entity concept. That says the owner and the business are separate. Both are not same. Now Emma started business with cash. When she invested the cash into business, the whatever the cash she has invested, that is called as capital. In the business she has invested. Right. Now, how you are recording? While you are recording, you should be an accountant of the company. Then only you will understand the transaction, whether it is an income for the company or an expense for the company. 2022 December 1st year, cash is coming into the business. Cash is coming into the business. See, cash is an asset. So what is the rule of real account? The rule of real account is debit what comes in. What is coming into the business? Cash is coming into the business. So cash account debtor, you are debiting, and with cash is coming in the form of capital. So capital account you are crediting to capital. Here we are debiting with DR and credit with 2. We are representing. Okay. Cash account debtor to capital account. Amount is 1 lakh. Amount is 1 lakh. Here always the debit is equals to credit. And here you need to give an explanation, that is called a narration, summarizing. So giving an explanation, being started business with cash. Started business with cash. Cash. So first entry we have passed. We'll see the next transaction. The next transaction is open a bank account with SBI. Open a bank account with SBI. How we are showing this? Bank is the receiver here. Bank is coming under the artificial person account because person created the bank. Now you are depositing business. Cash is going out of the business. You are depositing cash into bank, right? This is your bank. You are depositing into bank. So cash is going out. Bank is the receiver of your cash. What is the rule of personal account? The personal account is debit the receiver. Who is the receiver here? The bank is the receiver. SBI bank account debtor to what is going out? Cash is going out to cash account because cash is an asset. So you are crediting what goes out from the business. Cash is going out to your bank account. What is the amount? Amount is 30,000. I will tell you how to write a narration. I am not writing narration over here. Okay. Being cash deposited into bank. What is the next transaction? The next transaction is on 4th. Purchased goods from Ashu. Purchased goods from Ashu. Here you can observe the name of the supplier from whom you are purchasing goods. No, name is given. Whenever the name of the supplier is given, you should understand or assume that it is a credit transaction. So credit transaction means what? You received the goods immediately, but you are not paying the cash, but you have created the name of Ashu. Ashu account you have created. So goods purchased is an asset to your company that you are debiting. Debit what comes in. Goods or purchase you can write. Purchases account debtor to, we are not paid cash for the purchase. We have created an Ashu account. Ashu account. The amount is 20,000. 20,000. Okay. Purchase account debtor to Ashu account we have created. The bike example I have showed you now. Friend. Being credit purchase. The next entry is on 6th. On 6th the entry is sold goods to Rahul for cash. So goods are going out. Whatever the goods is going out, for that you are receiving a cash. So cash is coming in. We are debiting what is coming in. Cash account debtor to sales account we are crediting. Amount is 15,000. Always your debit will be equal to your credit. Okay. And narration is being cash sales. Goods sold on cash. You can write. The next transaction is on 10th. Bought goods from Tara for cash. See, name also mentioned. Cash clearly given for cash. So it is a cash transaction. Cash purchase. Cash purchase you are recording on 10th. Purchase account debtor to purchase account debtor to cash account. Cash account 40,000. 40,000. From here, this journal helps you to prepare trial balance also, because trial balance is a statement of debit and credits. So easily you can transfer from journal. Okay. The next transaction is on 13. Sold goods to Suman. So here name of the customer is given. He is your debtor. Okay. Is your debtor. Sold goods to Suman. So goods is going out. But Suman as an obligated with the company. He is going to pay later. So Suman account I am debiting. Suman account debtor to sales account. To sales account 20,000. Being goods sold on credit is the narration. Okay. On 13th. Next transaction is received a check on 16. Received a check from Suman, discount allowed. Here, what was the previous transaction? You sold goods to Suman. The amount was 20,000. You were supposed to receive 20. But instead of receiving 20, you have received 19,500. So you allowed a discount. When you allow a discount, is it an income for you or an expense for you? It's an expense. So what you are doing for expenses? It is coming under the nominal account. You are debiting all the expenses and losses. So here the entry is for 16. You received a check. You can write cash or bank account debtor. Whatever you have received, only that amount you can specify, not more than that. Otherwise your account won't tally, right? So 19,500 only you have received, and for remaining 500 you allowed a discount. Discount allowed is an expense, so we are debiting the discount allowed account. Debited 500. And what was the amount you were supposed to receive from Suman? Here you have debited Suman. Here you are crediting. So Suman account you are going to close. Suman account. Suman account 20,000. Always your debit is equal to credit. Debit is equal to credit. 19,500 plus 520 and here 20. And narration is being cash received or check received from Suman. The next transaction is on 20th. Check given to Ashu on account. On account means already you are having an account transaction with that person. So from Ashu, we have purchased goods on 3rd, right? Purchase account data to Ashu account. Here we credited Ashu. Now we are making payment to Ashu. So what you are doing here? You are debiting Ashu account. Ashu is the receiver. The personal account rule. Debit the receiver. Debit the receiver. Ashu account debtor to cash or bank account. Bank account. What is the amount? 10,000. 10,000. Still account is not clear. See, Ashu account. What was the amount? 20,000. But you have paid only 10,000. Still balance 10,000 is remaining. That's why still on account. Okay. Being cash paid to Ashu. Next transaction is on 22nd. Rent paid by check. 2,000. You paid a rent. Rent paid is an expense. Expenses are coming under which account? Nominal account. What is the rule of nominal? The rule of nominal account is debit all the expenses and losses, credit all incomes and gains. So here we have received a room facility. For that we paid a rent account. The space we utilized, for that we paid a rent account debtor we debited because rent is an expense and rent we paid in the form of cash. So cash account we have credited 2,000. Okay, so this was the previous entry. Ashu account debtor to cash or bank account. 10,000 we have paid. Still 10 is in pending. Now next transaction is on 23rd. Machine purchased from Paru 10,000. So here we purchased a machinery on credit basis because name of the supplier is given. Whenever name of the supplier is given, you need to assume that it is a credit transaction. Okay. Here we received an asset, that is machinery, but we have not paid the cash immediately. So the entry is December 23rd. What is coming in? Machinery is coming in. So machinery account debtor. Machinery account debtor to from whom we purchased? Paru we purchased. We not paid the cash. What was the amount? Amount is 10,000. 10,000. And the narration is being machinery purchased on credit. Okay. The next entry is, the next transaction is 29th. Paid telephone expenses by check. 1,200. So telephone expenses is an nominal account because telephone expenses is a expenses. What we are doing on 29 December? Telephone expenses we are debiting. Telephone expenses account debtor to cash account. We paid telephone charges in cash or bank. Through check we paid, no? So cash or bank account. Amount is 1,200. 1,200. Narration is being telephone charges paid or telephone bill paid. See here also you can see the give and take, right? Give and take. What you have given and what you have taken. You have utilized the telephone services. For that you paid a bill in cash, right? And rent also. The room facility, the space you have utilized, for that you paid a rent in the form of cash. Okay, so here you are applying the logic also and the rule also. Both are matching. Next, the last transaction is 31st December paid salary 4,000 pay 500. 31st December. So when you are paying salary, it is an income to the employees, expense to the company. So salary is an expense. Salary coming under nominal account. Salary account debtor to cash account. Cash account 4,500. Being narration is being salary paid. So for every debit, we have passed credit entries. These are the simple transaction which I have showed you. I'll take complete little hard questions also in the upcoming classes. Thank you for watching. If you are not yet subscribed, kindly subscribe the channel. Press bell icon to receive updates. Like and share if you like the videos. Okay. And if you need any particular questions, you can mail me. I'll try to solve those questions also. Thank you. Have a nice day.